In recent financial news, Verizon has released its third quarter earnings report, revealing a mixture of expected and surprising results. So, let's dive right in. Verizon reported revenues of $33.33 billion in the third quarter of 2023. This represents a decrease of 2.7% year-on-year, which, while not ideal, falls in line with industry estimates. This shows that despite a challenging market environment, Verizon has managed to keep up with expectations. Now let's talk earnings per share. Verizon posted a non-GAAP EPS of $1.22, exceeding expectations by 4 cents. This is a testament to Verizon's ability to effectively manage its financial resources and deliver solid results, even in a challenging economic climate. But it's not all rosy. The decline in revenues can be attributed to a decrease in postpaid upgrades, which resulted in a 12% year-on-year revenue decline in the wireless equipment business. This shows that Verizon is grappling with challenges in retaining and upgrading its postpaid customer base. However, it's not all doom and gloom. On the brighter side, Verizon generated a whopping $14.6 billion in free cash flow year-to-date, surpassing its 2022 levels. This signifies that Verizon remains a strong cash-generating machine, capable of weathering tough market conditions. Overall, despite a few hiccups, Verizon's financial performance in Q3 demonstrated resilience and potential for growth. As we navigate through a tumultuous financial landscape, it's clear that Verizon is not just surviving, but also strategizing for the future. Verizon's broadband business has been a key player in its third quarter performance, with promising results and projections. A standout achievement in the third quarter of this year was the significant addition of broadband customers. The company registered a whopping 434,000 net additions, marking an impressive streak of over 400,000 net adds for 4 consecutive quarters. This isn't just a game of numbers, though. With each new addition comes an increase in revenue. The average revenue per account rose by 4.5% year-on-year in the third quarter, reaching an impressive $133.47. This growth in revenue is complemented by a stable churn rate, which stood at 0.85%. The churn rate, which measures customer retention, shows that not only is Verizon attracting new customers, it's also keeping them. But what's next for Verizon's broadband business? Well, the company has its sights set high. They're expecting a return to year-on-year revenue growth next year, but that's not all. The company has also increased its free cash flow guidance for fiscal year 23 to above $18 billion. These positive trends in Verizon's broadband business and optimistic future projections paint a promising picture for the company. The strong performance in broadband, coupled with the projected growth, could be a catalyst for future success. As we continue to live in an increasingly digital world, the demand for reliable, high-speed internet is only set to grow. And with its strong performance and ambitious plans, Verizon is well-positioned to meet this demand and continue its upward trajectory. Verizon's stock valuation and potential risks are crucial aspects to consider for financial analysts and investors. Let's delve into Verizon's stock valuation. As of now, it's considered undervalued. That's right, undervalued. This implies that the stock's current market price doesn't reflect its intrinsic value. The potential upside of Verizon stock is estimated to be around 20% from its current market price. This suggests that the company's shares could see a substantial rise in value, making it an appealing choice for those looking for promising investment opportunities. However, it's paramount to remember that every investment comes with its own set of risks, and Verizon is no exception to this rule. The main risk to Verizon's recovery and growth trajectory resides in the macroeconomic environment. In this context, a worsening macroeconomic environment could pose significant challenges. For instance, inflationary pressures and economic downturns could impact consumer purchasing power. This, in turn, could lead to lower demand for Verizon services, including its broadband subscriptions. Given that the company's broadband business is a key revenue driver, a decline in subscribers could negatively impact its financial performance. Moreover, global supply chain disruptions, as well as increased competition in the telecom sector, are additional factors that could potentially affect Verizon's performance. Nonetheless, despite these potential risks, it's important to note that Verizon has robust strategies in place to navigate these challenges. The company's focus on digital transformation, network enhancements, and customer-centric initiatives could help mitigate these risks and drive sustainable growth. With potential upside and risks in mind, Verizon remains a compelling topic for financial analysts and investors alike. In conclusion, Verizon's Q3 earnings report presents both opportunities and challenges. We've traversed through Verizon's financial landscape, exploring the Q3 earnings report, the growth of its broadband business, and the forward-looking projections. We've also delved into the stock's current valuation, assessing its potential for a 20% upside. However, we've noted the risks too, particularly the impact of a worsening macroeconomic environment. As we navigate these complex financial waters, it's crucial to stay informed. Stay tuned for more updates on Verizon and other financial news. Remember to subscribe to our channel for more insightful analysis. Thank you for watching.